Good evening, all. I'm Epstein with your Metal Market Wrap-Up, and this wrap-up is for Monday, the 27th of March, 2023. We get a lot of economic data tomorrow. You walked in today, you didn't have any big bank problems. You actually heard yesterday that SVB, a number of their assets were going to be taken over by, First Bank Corp. That's all done. And now we've gotten some quiet for the moment. And with that, the risk-on environment lifted up all the stock indices. Gold sold off along with silver, but they are coming back a little bit tonight. Silver fell right into where it's still an embedded reading, and we're hoping it'll hold up. Currency markets up. And if you look at the energies, well, Jumpin' Joe, our president, Jumpin' Joe, he and his staff blew the whole thing. He wanted to buy under 70. It got to near 67. Now you're back to 73. Great job, Joe. And you could have done a wash sale. Remember, Congress has said you got to sell these 26 million barrels. All you got to do is sell with the left hand, buy it with the right. Who in America is going to say a word? You've accomplished the congressional mandate. You've bought back the oil by yourself, and it's all done. Tell me what's wrong with that. Nothing. Bonds and notes, as you take a look at what the market is doing, you added premium back today. But we'll talk about that in the financial area. When we look at gold, you're still nicely up, but begun a correction. You're down 1.25% for the week early on. You can see how the market's back up into the zone where it's creating some resistance now. The pattern is one of higher lows, but lower highs. So suddenly you're in a pause phase in the gold market. And if it gets under these lows here, this 1950 area, you do open the market up for the 1932 zone. When we take a look at Bollinger Bands, while you had run during the banking crisis right over the Bollinger Band, you know what I teach you? You only stay over the black line or under it 5% of the time. You've got to learn how to work with it. And you don't buy on the line. You wait for the market to come to you on your terms, and you pay attention. Are you embedding or not? You didn't embed. Therefore, if you didn't get gold bought here in the 1815 area, this was not the opportunity to buy the gold market, in my opinion. Doesn't mean I'm right. Gold-silver ratio, the more this falls, the stronger silver is against gold. And this was the opportunity to be buying silver as it's got an embedded reading. Now, if it loses the reading, out you go. You've got probably going to pull back then to the 2263, if not the 2190 level. So all those numbers are in play, but they're not objectives here. What is? As long as you're embedded, you're still looking for the 2400 level. That could be the market if it launches to the upside one more time. In the copper market, they tried to break it back today, didn't do it. Now, over the weekend, we saw news that in China, the manufacturing profits industry was down a lot. Well, the reason was we still had zero tolerance at the end of Christmas time into January. That's when the policy ended. And then we had the lunar holiday. So there's that impact. You have a lag. Everybody now is through with the COVID. We hope that, the peak of it is long gone. Lunar holiday is most certainly gone. Everybody in China, well, the government's turning its attention now to helping the property, infrastructure. So I'm looking forward to that market picking up. I think copper's quite fascinating here. I'd like it to churn a little bit against this 18-day average, either embed or correct further. Wouldn't even bother me if you went to the 395 level where the 100-day average is, but I'd like to see a bit more work. Either embed, find me a way that you get out of being overbought and I get interested. In the platinum, you've had a correction in a market that's got bullish bias. I define bias this way. It's really very simple. If the market's over the red line, which is the 18-day average of closes, I have bullish bias. If it's under it, I have bearish bias. Bias is a filter on swing lines and your other work. What we've had here is a market that has had bullish bias, got up to the Bollinger Band, then began a pattern of lower highs, lower lows, finding continual support at the 18-day average of closes. That's what markets often do. This is called a bull market break. Why bull? Because your bias is bullish. You're over the 18-day average of closes. In palladium, the same argument's not there. It's one day up, one day down. It can't seem to get away from the 18-day average, but it's putting on no pattern. And unlike the palladium market, the platinum market, you have a higher high and lower low pattern. That is not a trend. In the dollar index, the dollar's reasserting a bear trend for the moment. Now, if you take out Friday's high again of 103.02 and a half, that would be enough for me to say, the market probably wants to get back up to these averages. I was watching today a number of analysts on Bloomberg, how bullish they are getting on the dollar. I'm not seeing it. I see that if the Fed keeps going with higher rates, the banking system's fragile as it is, we'll see other problems show up, just the opposite. So what would make the dollar go up? I'm not getting his argument because I think it's easier for other currencies to go up against it. Lower highs, lower lows doesn't excite me yet. It could. You're oversold in that markets. That's the only reason I'm not excited. I teach this and I explain it to you every morning, and I want you to join me. In the mornings, specifically, 5:15, 5:30 in the morning, I start recording and walking through all the charts, setups. Often I go from the weekly chart to the daily back to the other, looking where they come in together and looking for that trend to set up. If you're a chartist, you want to get another chartist point of view, I cover all these markets. I take questions. All my subscribers can write me. I write them back unless I miss something, and I try to cover what they need in detail. And that's pretty much how I work with things. And often what you'll find is you'll ask me a question on a market, I'll shoot a short video, 30 seconds to a minute. It's easier. I talk right in it, show you the chart action, and away you go. Tell me the other people that run services like this. And my services are meant to be very inexpensive. Very inexpensive. They're not supposed to break your account. They're supposed to help you with your account. How do you get there? Go to iRepstein.com. At the top here, you'll see our icon. Give it a click. It'll take you right into the morning subscriber area. I'm Ira Epstein. Take care.